Hey guys, this is Bruce Marshall from Simpler Trading with tonight's video and market update for Friday, June the 7th. So let's look at the S&P. We'll start right here, and this turned out to be the best week of the year for the market. Huge rally. We'll talk about that here in just a second, but let's look at today's price action, which after a crazy week that we've had actually turned out to be kind of dull. This was very we rallied up this morning 28.84, and then we just kind of flatlined here, and I don't know if this was, no one could decide which side to be on. Do we want to go short? Do we want to go long? Are all the shorts already covered by now or what? But we just really did not have much in the way of movement after the initial push this morning. So let's go back out here and look at this on a little bit larger time frame. So this is from Tuesday, and we know that the low down here, let me grab this one, the low down here, 27.28, that this was when Powell indicated that we might have a chance for a rate cut. And of course, that just gave us the ammunition to blast off here. And we went by Thursday. This is 2 days. We went 100 points here, and then an additional, 30, 40 points up here. So we capped off the week. That's a total of about 156 points, on the week. And that's just a crazy move higher. A lot of this, of course, is short covering. We could expect that. But I think that it kind of turned into a little momentum buying, or FOMO, as people are looking at the rate cut and what it might mean and so forth. But if you remember, let's go back here to, this is a 10-day chart. Matter of fact, let's go to 20 days here. So on a 20-day chart, 28.92 up here, and we're just cascading lower, and at this point, you guys know how this works. Everybody knows how this works. At 27.28, we're going down here. It is the sky is falling, and it's everybody gets short, and of course, everybody that's short get their heads ripped off on this move back up higher. So, and again, we're looking at the S&P. The other indexes are very similar as well in the way that they acted and reacted. So let's go out here on a longer term time basis and look at, here's the S&P, of course, and we've got, let me pull the balls down here so we can see them. So again, we've got a rebound or a bounce here, and vols coming down here as well. The interesting thing about where we were here is that we broke through the 200-day moving average, and I thought we probably would bounce off of that, and we did not. And there's a fire line here at 26.50, and I really kind of thought that's where we were headed to, but of course, we bounced right back off. Now, the thing about it is that we had a weak payroll number today, which gives further ammo to the Fed to possibly, have a rate cut. And we've got a Fed meeting June the 18th, 19th. I don't think that we get a rate cut at this meeting. I think it's too soon. The Fed will want more data before they do anything else, so we're probably out in July. And I've actually heard this morning that it was around a 70% chance of a rate cut. So we have to, as far as the market goes, we have to anticipate that we are going to go higher in anticipation of that rate cut. And we're back to kind of a stone's throw from the all-time high, so kind of prepare for that. But at the same time, we are one tweet away from maybe some downside if problems develop with China or Mexico or the Fed, for whatever reason. So be aware of that. So as it stands right now, I'm very light. I took off a lot of longs the last couple of days, and I'm very light on trades, and I like it that way. When we're kind of in limbo land like this, I'd rather have fewer number of trades to manage if things get crazy. So I don't really have any good suggestions either way, long or short. But I can say that I would much rather, much rather be long than short here at this point in time, with the potential of a rate cut and so forth. But the for every long, or for every couple of longs, I'm also hedged on the downside. So it's easy for me to say that. And I would suggest kind of the same thinking. Don't get too long or too short in this market. There's just too much volatility with tweets and news coming at us rapid fire. So, again, be careful and be nimble. And all we can do at this point is to see if we get follow through next week, which I think we will. Or if for some reason over the weekend we get some, bad news tweet or whatever surprise and happen to pull back a little bit. But even if we pull back again, we want to be back into buy the dip mode at this point until we're proven otherwise, because this turn was substantial enough to break this downward trend. So that's what we're looking for. So with that, again, stay light, stay nimble, and we'll see what we get next week. So thanks for the time, and I will see you guys at the next update. Thanks.